Hi, my name's Chris Waples. I'm Managing Director of Barton's Chartered Accountants and Wealth Advisors. I'd like to talk to you today about the 2013-14 federal budget delivered on May 14th by Treasurer Wayne Swan. The key cornerstones of that budget were the federal government's initiative in disability called Disability Care Australia and the Gonski education reforms, both big ticket items. The headline budget deficit was $18 billion for the 2014 year, moving towards surplus in the years after that. But there's considerable concern among commentators that we're moving towards structural deficits in the outlying years as a result of income and expenditure trends. But the things I wanted to talk today about, which we think more directly affect our client base, are in the areas of personal taxation, business tax, superannuation, and a few observations about the medical and pharmacy area. In relation to personal tax, the Medicare levy has been increased from 1.5% to 2% of taxable incomes, and that difference is being set aside to partly fund the Disability Care Australia initiatives. In addition, the baby bonus has been eliminated and replaced with lesser compensation through Family Tax Benefit Part A. And finally, there's been some changes to tax deductions for self-education expenses, which are going to be capped at $2,000. And that's going to affect a lot of our professional client base. In relation to business tax, the ATO will be focusing on the use of trusts, compliance activity, the avoidance of tax through the use of trusts will be a clear focus of the ATO, as it has been for some time. More extensive data matching between other sources of income and expenditure, such as property sales, share sales, will be tracked and matched against taxpayers' returns. So Big Brother is well and truly watching you, I can assure you. Small business GST concessions that were announced in the last budget have been reduced and eligibility criteria tightened. So in last budget, out this one. And finally, R&D concessions have been strengthened for small companies and reduced for large companies. And for those with a turnover of $20 million and less, there's certainly some opportunities to take advantage of. Turning now to superannuation, most of these announcements were made pre the budget on the back of widespread community concern about the government again meddling with retirement incomes policy and taxation. So we knew most of the big picture items there. In relation to contributions, the cap for tax deductible contributions will be $35,000 per annum from 1st of July 2013 for the over 60s and from 1 July 14 for the over 50s. For everyone else, it's $25,000. The long-awaited deferral of the $50,000 cap has been shelved indefinitely, unfortunately, for many of our clients. In relation to contributions for higher income earners, with those with income over $300,000 a year, contribution tax will be increased from 15% to 30%. For those with significant superannuation benefits and earning more than $100,000 a year in superannuation income, the tax on the income over $100,000 will be 15%, whereas currently it's nil. And finally, the superannuation guarantee levy for employers will increase from 9% to 12% over a number of years, and increasing to 9.25% from 1 July 2014. Medicine and pharmacy. Many of our practitioners will be affected by the freeze in Medicare benefits from November through to June next year, and they'll need to carefully look at their pricing for their patient consultation fees to ensure their incomes don't go backwards. Similarly, there's changes in the GP arena about charging for care plans and standard consultations on the same day, so GPs will need to review their practices there. The professional development limitation on tax deduction I mentioned earlier will particularly hard hit our medical clients who have a very high financial commitment to keeping up to date, especially those that need to keep abreast of international trends. So that's unfortunate from that perspective. In relation to pharmacy, there's a number of new drugs that have been added to the PBS and a number of other administrative changes there which should provide enhancements in dealing with the PBS. Okay, well, federal budgets are a dry topic at the best of times. So from Barton's point of view, we'd just like to share some perspectives from our point of view on where we see things. There's a lot of doom and gloom out there about the economic environment, and we think a lot of that's not well placed. There are a lot of opportunities in Australia, and certainly when we travel overseas, we're constantly impressed by how much we do well in Australia. So we're in a great place. Let's make the most of our opportunity, and that's certainly the attitude we're taking with our clients. At Barton's, we believe in striking a balance between work and play, and we're here to help you. We'd really like to discuss your plans with you, and as you know, contact your normal person and we'll put you in touch with the right expert. We look forward to seeing you over the next few months as another financial year slips by, and until then, take care and all the best from the team at Barton's. See you.